Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is June 16, 2023. It is Friday. Take a look at the sterling versus US dollar in a Forex quick look. I'm going to focus a little bit on what happened this week and where we stand right now from a technical perspective. So sit tight. Looking at the price action this week, the low was actually this day right here with this little move to the downside after closing higher on Friday. The price on Friday, last Friday that is, moved up to the low of this swing area. The swing area came between 125.98 and 126.79.8, let's call it 80. So it's about 80 pips of this swing area, but it was somewhat key going back in time. We had a number of different swing highs right here and swing highs right through here, and then the market started to use the bottom of that swing area here and rotate to the downside. It wasn't until the month of May where the price started to move back up and retest those highs right through here, and then rotated back to the downside. And in the month of June, the price started to move higher, and through that level, actually it was this week that the price started to move through that level, and we broke above the high of that swing area on Wednesday's trade and continued on Thursday and continuing trading here today. Also of significance here is the 61.8% retracement. That's of the move down from the 2021 high to the 2022 low. The 61.8% retracement comes in at 127.605, and as you can see in trading here today, the low price got within about 6 or so pips of that 61.8% retracement and stayed above it. So guess what? The buyers are keeping control above that short-term support level off the daily chart. The other level of significance going forward, if that 61.8% retracement is broken to the downside, would be this swing area again between the 125.98 and 126.79.8 or 126.80 level. Given it's 80 pips, I would expect that if we break below the 127.60 level, we look down toward the 126.80 level on the daily chart for support buyers. That would equate to the high prices that we saw in the month of May. It just makes sense that that would be the level that traders would come in and lean against on any sort of corrective move below the 61.8% retracement. But with the current price trading at around 128.20, we're still a bit a ways away from that level, about 60 pips to be exact, or not exact, but somewhat exact. So there is room to the downside here on a corrective move, but right now the buyers are certainly more in control on the daily chart. Let's drill down to the 4-hour chart and see what that's telling us. And of significance in this 4-hour chart is what happened here at the lows this week. This is a low from Monday. Remember, we saw that dip on the daily chart that moved lower, but the green line represents the 200 bar moving average on the 4-hour chart, and lo and behold, when the market corrected on Monday, where did we go? Right to the green line, found support buyers against that level. You can see it more closely here, and then it's really been a trend type move to the upside. We did have these highs from the month of May, which stalled the rally. Actually, we moved just a little bit above it here midweek and then rotated back to the downside. But this low price right here, this is where you start to read the tape, if you will. This low price right here on the 4-hour chart equaled the high price right here, and that gave the go-ahead to push to the upside, breaking above the swing area and continuing the move to the upside. I put a Fibonacci retracement from the low of the week to the high of the week. The 38.2 comes in right around the 127.09 level. The 50% retracement level comes near this swing area right through here at 126.67, and this area right here would be the a level that if it were to go below that level, that would increase the bearish bias a touch, give the sellers more control, give them more confidence to the downside. Recall from the daily chart, the top of this swing area that I looked for support, that I'll look for support on any sort of move to the downside, comes in around 126.80 level. Going back to the 4-hour chart, the 38.2, the 50% retracement, the 126.80 level is in between those levels. So it would make sense that if the market were to start to move back down to the downside, we find some support buyers in that area above the May highs and can move the price higher off of that level. So it works from a retracement level of the week's trading range. Also works from the levels going back to May, the 126.80 level off the swing area on the daily chart. So buyers remain in control in the sterling versus US dollar. Stay above the 127.60 level is close support. Move below that level on 126.80 comes into play. On the top side, look for this area up here near the 130 level. That's a nice round number. Also levels that correspond with these swing lows right through here. We found support near the 130 level on the way to the downside. For again, these are months. This is a month of data, so this is nearly 2 months of data before breaking below the 130 level and opening up to the downside. So that would be a key resistance, a key target on the top side. There you have it. A look at the sterling versus US dollar in pretty good detail. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.